Live from Bloomberg's world headquarters in New York, I'm Shanali Basak.
And I'm Tim Stenovec. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
And Tim, we are now less than 1 week away from the expected time of the next Bitcoin halving. We're going to speak to Riot Platforms CEO about the much anticipated event set to reduce the rewards companies receive from mining Bitcoin.
And we will also talk with the CEO of Cipher Mining about this major moment in crypto as this sector sees downward pressure on its shares.
And the fever for crypto ETFs extends around the world. Hong Kong gives conditional approvals for asset managers to start spot Bitcoin and Ether funds.
All that and more ahead on Bloomberg Crypto. But first, here's a snapshot of the market and Bitcoin over the last week. Well, not a pretty picture. Down around 10% just over the last week. Much of this happening on Saturday when Bitcoin fell the most in more than a year. This as Iran launched attack drones and missiles against Israel in apparent retaliation for a strike in Syria. We did see a bit of a rebound on Sunday and in the earlier part of trading yesterday on Monday, only to see Bitcoin move lower as yields have spiked. Now, those higher yields also putting pressure on Ether, which, by the way, is down around 14% over the last week, down another 2% today. Also seeing selling in the wake of the latest escalation of tensions in the Middle East. Perhaps unsurprising then that with crypto in decline in recent days, we also see crypto-linked stocks moving lower. Coinbase down 7.4%, that after falling 6% on Friday, more than 9% yesterday. Also, MicroStrategy down another 7% today, down 4 days in a row. Shanali down more than 37% from those March highs.
Well, it's interesting because in the crypto world, it's almost like Bitcoin is still kind of a flock to safety. The dominance of Bitcoin in the crypto sector is at a 3-year high, Tim, and it accounts for almost 55% of the $2.4 trillion market. It's a level last seen in April of 2021, according to CoinMarketCap data. Those Bitcoin ETFs have been a big help, amassing about $56 billion in total assets to date, and it is just incredible. You've seen Bitcoin prices over this time in the last year just double. Solana up fourfold, yet you still see Bitcoin really taking the fold here.
Okay, well, let's look at how Bitcoin miners are performing ahead of the halving. That is set for this week, we should know. Mining companies are boosting their cash reserves to cope with the negative impact from the halving. They're generating more computing power than ever to mint the cryptocurrency. The stocks, though, they have been sliding of late. Something we should note that has happened in the wake of previous halvings over the life of Bitcoin is the price of Bitcoin has increased, reached new highs after each halving. So that has helped offset some of the declines in rewards that crypto miners get for mining Bitcoin. Well, speaking of halving, here's a refresher on how the event is going to play out.
The Olympics, Sporting World Cups, leap years, and Bitcoin halving. They each happen every 4 years, and in the crypto world, halvings typically meant a boon for prices. In a nutshell, Bitcoin halving means fewer new tokens are issued. That's because Bitcoin miners, who validate blockchain transactions, receive 50% less of a reward for doing so. At Bitcoin's launch in 2009, miners received 50 new coins per block. Post the halving in 2024, that'll be cut to just 3.125 Bitcoin instead. In the past, we've seen prices spike following the event. For example, in 2012, when the token jumped by 8,000% in the following 12 months. This time around, the prospect for further gains is unclear. Some analysts say the halving could trigger upside of at least 80%. Others argue the event is already baked in, particularly as Bitcoin's already risen to fresh records this year, which brings to mind a familiar phrase: past performance does not guarantee future results.
Now we're going to discuss this with Riot Platforms CEO Jason Les. Jason, on one hand, you have seen a significant uptick in Bitcoin prices in the last couple of months generally, but you look at the knee-jerk reaction, the pretty volatile move you saw downward over the weekend when you saw geopolitical risk really start to hit the market as well. Very unexpected moves. How do you think about the potential for Bitcoin to grow into this halving when there are so many unknowns?
Well, I think the approval of several of the Bitcoin ETFs at the beginning of this year is such an incredibly positive catalyst for Bitcoin. And I think that's the reason we've seen such a big rise up in price ahead of the halving, something we haven't seen in previous halving cycles. The fact is that put Grayscale Bitcoin Trust aside, there's been 27 billion in net inflows in these ETFs since they were launched just 3 months ago. That means over 500,000 Bitcoin has been purchased by these ETFs over that time period, which has had a pretty, I think, dramatic impact on the price. And that's at a time when we're mining 900 Bitcoin a day, or the network is releasing 900 Bitcoin in new supply per day. And at the halving, that's getting cut in half to 450. Bitcoin still has a lot of fast money in and out of it, though. Riot is here for the long term. I think we're seeing more long-term holders in Bitcoin more than ever. But when geopolitical events take place, there's different news items. We tend to see a lot of short-term volatility around Bitcoin. For us, that's just short-term noise. Our long-term investment thesis on Bitcoin is strong, and I think we have the setup for a very positive move in Bitcoin over the next several months here.
Okay, well, speaking of the long term, one thing that we knew in the long term that was coming certainly was the halving, which is set for in just a few days. Jason, I'm wondering what you're doing at Riot ahead of the halving. Are you planning to unplug any machines that you use for mining currently because they'll overnight become unprofitable?
You can't really prepare for halving once it's coming up. The preparations that we made for this halving came years ago. They came from the foundational pillars of our business when we aimed to have a very low power cost. That's the number one input cost, variable input cost for Bitcoin miners. And through our power strategy, we had a all-in 2.2 cents per kilowatt hour power cost in 2023. That's one of the best of the industry. So that gives us a lot of staying power when Bitcoin mining economics become constrained as a result of the halving. Remember, there is a difficulty index in Bitcoin as well, and that adjusts up and down with how much hash rate leaves and joins the network. So that foundation to our business is what prepared us for the halving today. And the massive expansion plans we set in place years ago were preparation for the halving today. As a result of those plans, we have a new facility coming online this month. It's been a major expansion we've been working on. We have the latest generation equipment, the most power efficient equipment out there that's going to be turned online very soon here. So, the work we do today is preparing for the halving in 2028. The 2024 halving, that preparation came years ago.
Well, let's talk about how you think the hash rate might change. You were kind of talking about the pressure here that miners would feel just as a result of the halving in itself. How do you think things play out once we see the halving pursued?
So I think in this case, we won't see the network hash rate drop down as much as we've seen it in the past. We've got a good appreciation in price this year. Bitcoin mining hash price, Bitcoin mining economics hash price has gone up over this year as a result of that. We've seen a lot of miners out there upgrading their equipment to the latest generation Bitcoin mining hardware this year as well. That's another different dynamic. In previous halvings, we've seen new generation equipment come out after the halving, and this halving, major manufacturers have been releasing new models before the halving. So that new hash rate is going to be more resilient to reduce Bitcoin mining economics. I think it's the fact that people have already upgraded, a lot of miners have already upgraded their hardware, probably means we're going to see less of an impact to the network hash rate. My expectation would be after the halving, we see very little decrease in Bitcoin mining hash rate if the price stays where it's at.
Hey, Jason, I want to talk about the company's stock price. Riot Platforms stock down 7% right now. Fresh 52-week lows, in fact, down at levels last seen since March of 2023. So 13-month lows as we speak. Short interest right now, $355 million of short interest. What's the message that you have for those taking a short position in your stock?
Well, our fundamental business is mining Bitcoin. And through our power strategy, we are mining Bitcoin, effectively buying Bitcoin on a direct basis at a discount to its market price. So we're trying to provide a leveraged position on Bitcoin to investors. I think that there is a lot of uncertainty around the miners, particularly the public Bitcoin miners, that investors can take a view on leading into the halving. There's a lot more capital and eyes in this space than there was last year. Remember, Riot lived through the previous halving before in 2020, and we saw very similar dynamics to what we see today, depressed stock price, etc. On the other side, we had very positive stock performance. Now, as the intro to your segment here stated, past performance. It does not guarantee future results. So I don't know exactly what's going to happen here. But I think our value proposition is that we are using our direct low cost of production to accumulate Bitcoin at a discount. We're scaling up to do that in a wider and wider scale. And I guess the market will just have to wait and see which miners are performing on the other side of the halving here.
Surely will be an interesting moment to watch. Riot Platforms CEO Jason Les, we thank you so much for talking us through how you think about the upcoming halving. And more on the halving soon as we talk to Cipher Mining CEO Tyler Page as his company prepares for the event.
And Hong Kong paves the way for Bitcoin and Ether spot ETFs in a move that could widen crypto adoption.
And to access all the latest data and news on crypto, check out CRYP Go on a Bloomberg terminal. This is Bloomberg.
As miners, we're very excited to go into a halving where, for once, price has not declined prior to the halving, but rather price has gone up. So everybody's obviously maximizing and optimizing to that.
That was Marathon Digital CEO Fred Thiel last week speaking about the Bitcoin halving. And as you can see here, Marathon is actually the most shorted crypto miner, as some traders are betting that mining stocks will fall. Total short interest across the sector stood at about $2 billion, and that's according to S3 Partners. And that short interest accounted for almost 15% of the group's outstanding shares, which is 3 times more, Tim, than the U.S. average.
Well, for more mining, let's bring now in Cipher Mining CEO Tyler Page joining us here on set. Tyler, good to see you. How are you guys over at Cipher? How have you prepared for the halving?
Yeah, thanks, Tim. We've been preparing for many years. You know, our business is one that requires long-term planning, and these halvings are known events. And so the evolution of mining has really changed since previous halvings, where we had a really fragmented market with more hobbyist-type miners. Cipher is a large industrial, institutionalized, billion-dollar company that operates large-scale data centers. And those take years to plan, and we plan around these halvings. So things are great. We had a profitable quarter last quarter, and we're looking forward to what happens after the halving.
How are you preparing for the economics to change? If you're getting half the rewards, then how do you get more of the profit?
So when you look at the economics of a miner, the largest thing that you can control from an operating expenses perspective is your cost of electricity. Cipher is pretty unique in this space. 96% of our portfolio is hedged at a fixed price that is the lowest in the industry. So, you know, margins are very large and have been great recently. I think last month was the all-time highest revenue month for miners in dollar terms. So there's a lot of room right now. And so effectively, we're like a low-cost producer among commodities producers.
How do you see your business changing over the next year or so? Do you think that Bitcoin will be enough, or do you feel that you have to diversify further?
So we're very focused on Bitcoin mining, at least in the current plans. You know, this year we've seen really 2 large catalysts that have driven a lot of investor interest from what I would say are different types of investors. Historically, maybe you saw family offices or very crypto-forward VC-type investors. We've seen a lot of more traditional event and catalyst-driven investors and value-driven investors occupying my calendar. And that's really because we've had a demand catalyst with the US ETFs, and we now have this supply catalyst that's also potentially going to impact the price of Bitcoin in a very favorable way.
Do you have any plans in the coming years to diversify geographically your mining in order to offset some risk when it comes to energy costs?
We look everywhere globally. This is a global business, and so that cost of electricity really drives the unit economics of the business. So we look everywhere. But I think price and cost is one element. You also have to look at stability, respect for rule of contract, rule of law. We've seen in other places in the world where maybe you have a good price, but it's not that stable. So there's a little bit of a balance. We are very US focused right now. Our data centers are in Texas. There's a lot of renewables down there that provide a lot of opportunities for favorable electricity prices.
The issue with Texas, though, is the health of the grid. We've seen several times in recent years extreme weather threaten the health of the grid, and we've seen many customers lose power. What do you do to prepare for extreme weather, or what do you do in cases of extreme weather in the state?
So Bitcoin mining is a very unique user of electricity. We tend to want it. Our data centers want to use electricity generally when it's not desired by other parts of the grid, and then therefore the price is lower. So if you look, typically Bitcoin mining does not add to peak demand. Those are the times when an operation like ours curtails its usage. And in fact, if you look at Texas this last summer, it broke several records for all-time record peak demand. And if you looked, about 2.5 gigawatts of power from Bitcoin miners curtailed. So in fact, the industry, and Cipher is certainly a big part of this, contributes to grid stability. So it actually helps address that exact issue.
How do you think about the industry at large? Even though you have optimism kind of heading into this, you say you've prepared, there are a lot of folks out there that believe that there could be a washout, that many may not survive out of the miners into the cycle. Bloomberg even says there could be a $10 billion blow across the industry according to current Bitcoin prices, and how much could be lost in future revenue. Where's the washout coming from?
Well, I think it will be this question of ever squeezing economics over time. So this is really a commodities production type business, and in large time frame probably approaches the marginal cost of production, just like other mature commodities. The difference here is we're still at this early stage of network adoption of this new commodity, so you're always weighing this growth narrative versus sort of the long-term economics of the industry. So looking forward, I think, and you've seen this if you look at like the last halving, as I'm sure you guys are familiar with, this industry was, again, more of like a cottage industry. There weren't these big, more institutional type names like Cipher. And so what I think you'll see is the continued maturation of the industry. I mean, this industry is now effectively the security budget for $1.25 trillion of value.
But, you know, on one hand, I can get the argument in prior halving cycles, you did see ultimately the price of Bitcoin rise. Fine. I do understand the argument as well that you have more demand through the ETFs. How do you know that's not priced in? How do you know that history would repeat itself this time?
So I think we still see a bunch of markers for the long-term growth of the network. I think it's very hard to predict Bitcoin prices on any kind of short-term time frame. Here's what happens tomorrow, this week, next month. But over the course of years, I think you've seen a steady course of adoption. Again, at the last halving, I used to get questions like, what if the US outlaws it? And now we have Larry Fink going on television talking about, you know, how Bitcoin is the most exciting thing BlackRock's got going on. So I think in large, sort of longer time frames, we can remain very, very bullish on the adoption of the network. And I think, again, just to give some numbers, the BlackRock ETF alone, I think, has purchased 271,000 Bitcoin so far this year in 3 months that it's been around. Starting Saturday, the annual amount of new Bitcoin coming to market will be about 164,000 Bitcoin. Just that supply-demand dynamic gives us great confidence in the price of Bitcoin long-term going forward.
Long-term, you may have confidence, but I think short-term, a lot of people were reminded over the weekend that this is an asset that trades 24/7 and is still subject to significant swings when it comes to price. So, i.e., lots of volatility out there. Are you worried that still scares people away, that, you know, one Saturday could see a 7% drop in their price?
I think in some ways the weekend price action validates how valuable this technology is, right? Every other market was closed. Some large geopolitical event happens, and this is the only thing where investors can go to express a reaction to that. Just like everything else in our world has digitized and is on demand and is available, there's no reason why this kind of investment, this set of investments available to investors won't move in the same direction. So in some ways, yes, that's a volatile weekend, but that also proves the long-term use case.
Tyler, we're going to have to leave it there. Thanks so much for joining us. That's Cipher Mining CEO Tyler Page joining us here on set. Well, coming up, Hong Kong gives Bitcoin and Ether ETFs the green light. The details next. This is Bloomberg. Hong Kong gave conditional approvals for asset managers to start spot Bitcoin and Ether ETFs, boosting access for the wider crypto market. Let's get the details from Bloomberg's Mike Regan. Mike, we saw what happened last time Bitcoin ETFs, or I should say not last time, but when Bitcoin ETFs were approved here in the United States. The last few weeks notwithstanding, prices just went higher. Is this priced in already because of what we saw in the U.S., or is there more room to run based on the folks you talked to if we see more geographic widespread approval?
Yeah, so we did see a bit of a pop in both Bitcoin and Ether after this conditional approval was announced. I think in the long run, it's a much different story, though. I mean, Bitcoin ETFs in the U.S. are now have assets of more than 50 billion. Bloomberg Intelligence is estimating only about 1 billion for these assets in Hong Kong. And there's really a big elephant in the room when you think about this, and that's mainland China. You know, mainland Chinese investors have access to Hong Kong securities through the Stock and ETF Connect program, but it's not universal. And remember, Bitcoin was banned by China and Bitcoin mining in 2021. The assumption is that China is not going to allow these ETFs to be traded through the Stock Connect. So that's the big difference. I think obviously there would be great demand for Bitcoin in China. If you look at what's been going on with the Chinese currency, it's sort of your classic bullish case for crypto in that it keeps weakening and weakening. People there are desperate for a hedge against the currency weakness and the potential economic weakness. You saw gold ETFs trading at something like a 30% premium because of this. They actually had to stop trading of some gold ETFs. So I think there is a ton of potential demand in China, but these ETFs will not be able to satisfy it, presumably, at least in the near term.
Just about a minute here. You know, you have Ether being conditionally approved in Hong Kong. Big cloud over the idea of Ethereum ETF approvals on a spot basis here in the United States. What does it say about the difference in approach?
Well, yeah, I mean, clearly Hong Kong is comfortable with trading Ether in a ETF form. I think the latest news we reported and others have reported is that the Ethereum Foundation itself has been subpoenaed by the SEC. So I think we really need to see where that shakes out. They clearly are trying to test the waters, determine if they consider it a security or not. So I think that's a big issue that obviously has to get figured out before any Ether ETF is approved in the U.S.
Regan, we thank you so much for keeping an eye on what's going on around the world. Of course, a lot of places dying to be that next digital asset hub, right, Tim?
Yeah, and you know, Shonali, when I see you next, the halving will have occurred.
It will have. You know what I wonder about that is how much we will know at that time what's been priced in, what has not been priced in. Also, really interesting statistics over there from Cipher Mining about what supply will look like relative to the demand that is coming in for Bitcoin per ETF provider. Tim, that does it for Bloomberg Crypto. Join us same time, same place next week, Tuesday at noon, Wall Street time. This is Bloomberg.